All right, we are about to pull back the curtain on a massive story that's unfolding in the silver market. But hey, this isn't about the daily price flickering on your screen. No, we're going much deeper, right into the physical vaults where the actual metal is stored. And trust me, what's happening in there? It could change everything. What we're digging into here is a situation that some are calling, and this is a quote, a potential silver inventory apocalypse. Now, I know that sounds incredibly dramatic, but as we unpack the clues from the world's most important warehouses, you're going to see exactly why they're using language like that. The real story here isn't about paper promises. It's about a very real squeeze on the physical stuff. And this slide, well, it gets to the very heart of the conflict. On one side, you've got the paper price. That's the number you see on a screen, and it just reflects financial contracts being traded back and forth. But on the other side, you have the physical reality. We're talking actual, heavy silver bars sitting in real vaults. The billion-dollar question is, what happens when that paper price completely disconnects from the reality of what's left in those vaults? So, that growing disconnect is exactly where our investigation kicks off. You see, the real action isn't in some noisy trading pit. It's a historic physical squeeze happening right now in the vaults that are the absolute bedrock of the entire global market, London, New York, and all the way over in Shanghai. And make no mistake, the scale of this problem is global. This isn't just some temporary glitch in one little corner of the market. What we're seeing is a synchronized supply crisis, and it's hitting the great epicenters of the silver world all at the same time. All the data is pointing to one kind of scary conclusion. The well of available supply is running dry. So clue number one, China's great silver drain. Our journey starts in the east with what you can only describe as a giant global vacuum cleaner for physical silver. And that vacuum cleaner is China's immense and absolutely relentless industrial demand. Just chew on this for a second. China, by itself, consumes more than half of all the silver supplied to the entire planet each year. It's just incredible. Its massive industrial engine, building everything from solar panels to electronics to EVs, has this ferocious, unending appetite for the metal. And right now, that engine's fuel tank is flashing empty. The silver stockpiles on the Shanghai Futures Exchange, which is the main physical hub for all of China, they haven't just gone down. They have absolutely cratered to just 715 tons. That is the lowest level in 9 years, a period where China's industrial needs have just exploded. The buffer stock is basically gone. And you can actually see this scarcity in the price itself. Buyers in China are consistently being forced to pay a premium, basically extra money right on top of the Western price. You can think of that premium as the market's fire alarm. It's a big, flashing red light signaling a desperate, urgent need for physical metal, not for speculation, but to literally keep the factories running. Okay, now for clue number two. A squeeze on Wall Street. That intense pressure from the east is now starting to buckle the system in the west. We're turning to our second clue, and this one comes from the COMEX in New York, where a major financial player just made a move that has everyone's head spinning. So in just a few days, something happened that, well, it's pretty jaw-dropping. Delivery notices were issued for over 60% of all the silver that was officially registered and ready for immediate pickup. To have more than half of the entire ready-to-go stock claimed that quickly, it's like a run on the bank. It's a massive vote of no confidence in holding a paper promise. People want the real thing. But here's the plot twist. The most stunning part is who is doing the claiming. J.P. Morgan, a financial behemoth historically known for being a major supplier of silver into the market, has done a complete 180. Just look at this table. They took delivery of 371 contracts while supplying a measly 5. The biggest known supplier on the whole exchange isn't supplying anymore. They're taking. They are accumulating. Now let me be clear, this is not some minor tweak in a trading strategy. This is a monumental strategic pivot. When the most sophisticated player in the entire precious metals universe stops providing metal and starts hoarding it, well, that is a massive signal that the physical shortage is very, very real. So that brings us to the big question, right? What's the underlying motive for all of this? Why is this happening now? Well, the answer is a pretty simple but incredibly powerful imbalance that has been building up for years. We are now in the fifth straight year of what's called a structural supply deficit. For half a decade, year after year after year, the world has consumed more silver than all the mines on the entire planet have been able to produce. This isn't a one-off thing. It's a chronic, compounding problem that's been quietly eating away at global stockpiles. And the sheer scale of this deficit is just staggering. Since 2021 alone, the shortfall, the gap between what we use and what we mine, is approaching 800 million ounces. To put that into perspective, that is almost an entire year's worth of global mine production, just vanished to fill the gap. And it's not like you can just flip a switch and get more. Global mine supply has been pretty much flat for the last decade. Finding rich new deposits is incredibly hard, and opening a new mine can take more than 10 years. The cold, hard truth here is that there is no quick fix coming to refill the vaults. Okay, so let's connect the clues. Let's be the detectives here. What happens when all of these powerful forces collide at the exact same moment? Well, you get a perfect storm. The ideal conditions for a powerful and potentially explosive repricing event. Just think of the ingredients. You've got a multi-year supply deficit crashing into unstoppable industrial demand. You've got inventories that are just vanishing with no new supply on the horizon. And then on top of all that, you have a financial giant that's hoarding the metal. And this is all happening against a backdrop of global currency debasement. It's a lot. This powerful collision of factors, it has a name. Some are calling it escape velocity. It's the theoretical point where the physical fundamentals, the actual supply and demand for real metal, become so overwhelming that the paper markets are finally forced to wake up and catch up with reality. And this right here is exactly why that matters. The COMEX, the big exchange, is a leveraged market. The number of outstanding paper contracts is 244% of the actual physical silver available for delivery. It's really just a big game of musical chairs. For every 100 physical chairs, there are 244 people holding a ticket saying they're entitled to a seat. It just doesn't add up. Which brings us to our final, lingering question. With physical metal vanishing from warehouses at a record pace and paper promises dwarfing the real supply by more than 2 to 1, is the silver market about to witness a head-on collision between those paper promises and a very, very unforgiving physical reality? The evidence we've looked at today certainly suggests that collision might be a lot closer than many people think.